Okay, it's after lunch, it's warm, and there's an accountant about to speak, so this would be the time to take out the 5-minute energy drinks if you have one. We're going to make the assumption that you've raised a little bit of money, probably not $10 million from Kickstarter, but at least a little bit to get going, and you're running around a little chaotic. You've got some sales, you've got some expenses, and at that point, I generally will get a phone call from a client who says, "Hey, Dave, I think I'm ready to hire an accountant. I need some. I'm doing everything." And first thing I say is, "Okay, give me a little description of what you're looking for, and then what are you willing to pay?" And the general answer I get is anywhere from $12 to $15 an hour. I'd be willing to pay for my accountant. So, and then I say, "Okay, no." So I will spend the next little bit of time explaining to them that a finance professional accountant it's critical business. They will be part of your key management team. And then when the discussion ends, they don't hire them anyway. But 3 to 6 months go by, and eventually they will hire a finance professional, and it becomes part of the team. And just about every time, and I probably have some examples here in the audience, they'll call me back and say, "You know what? I wish I'd done this 6 months ago." It is a critical part of the team. It's not just, besides the tremendous personality you're going to get, you will also get a lot of financial advice, and it will be important to the business. You're going to hire that accountant. You have someone who comes in who knows what they're doing. You know the very next day, because the entrepreneur has watched some TV program or saw Shark Tank, he comes in and says, "You know what, we're totally going to change the business model. We're not going after the healthcare vertical. I decided we're going to go after the industrial vertical for XYZ reason," which may have some good reasons behind it, but not probably well thought out, because the general entrepreneur is going to fire way before they aim. They're passionate about what they're doing. They're always right. The accountant's idea is to, wait a minute, we have a limited amount of human capital, we have a limited amount of financial capital, let's lay this out and really make sure that what we're doing works. Because the decisions you make when you first raise money are not always long-term decisions, they're often short-term decisions, especially if you're going to raise a second round. Because at that point, you're just trying to conserve cash to get to the point where you can raise a second round. So your accountant, who's going to want to aim before you fire, and the entrepreneur who is, let's just fire, the heck with it. You eventually will get to the right decision, because you have two different disciplines, and that is the value of it. It's really the value from the accounting standpoint, is to prove out your concept and make sure your numbers are solid. And then finally, just to get to the final point is, you really should know your numbers. Just because you have an accountant or a finance professional who's going to put the numbers and make sure they're solid, make sure you have metrics, make sure you're on plan, make sure your cash burn is solid, you still should know them. So if I say to you, "Hey, how's business?" the answer I always get is, "We're killing it." But that's really not knowing your numbers. That's just the entrepreneur running around answering a question. But you should be able to say, "Hey, our sales are up 18%. We're forecasting 20%. Our margins are 34%. We thought they'd be 32%, but here's where we're squeezing some extra margin. Our overhead's flat at 15%. We have 91 days cash on hand, so I know we're going to make it to our second round, and our working capital position is 1.8. If you can't answer that question, or you don't even know what that means at this point, then you don't know your numbers. But they are critical, and there's two reasons for that. One is, if you have a limited amount of money, you have to spend it wisely, and you have to have a plan, and you have to have metrics to spend it wisely. So that piece you're going to get. The second piece is, if you know your numbers and you know you're not meeting your numbers, you will consciously and subconsciously, as you're out there operating the business, you'll hone in on where your problems are. If your margins are short from where you projected, when you're actually out there operating your business and you know that they're short, you're going to see little areas to improve on, and it will make you more efficient. And you will realize over time that accountant or that finance professional really will be a key part of the team. So again, probably hire the accountant sooner than you should. Obviously, you're not going to be able to hire a CFO or a controller right away. You can probably outsource it. You may even be able to get somebody to help you out just on the interim. Bill Brigham's office certainly can function as part of it for the planning piece of it. Then when you have them, use them to actually get your numbers solid, lay out a cash plan, and then aim at least a little bit before you fire, and then just know your numbers. Know them cold and know that you're on plan with them. Thanks.